Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the market rundown. SPY IWM QQQ heading into the first week of quarter 2 and April 2017. So SPY, we had a bearish candlestick form on Friday with an upper wick of profit taking and a double top at the high of the past 2 days, 236.52, 236.51, and it closed down near the low of the day as we saw some bearish action at the end of the day, giving momentum to the bears heading into next week. So we have another lower high here that has formed at this point, and we're going to be keeping an eye. Again, I keep drawing this downtrend resistance line on these videos because it is the next level that I'm watching to see if the bulls are able to get over. Right now, we are currently rejecting just below it. We did close just below by 1 penny, the middle Bollinger Band on the daily time frame. Anything within a penny, I'd certainly give enough wiggle room where that doesn't really matter too much to me. As far as I'm concerned, we're right on that middle Bollinger Band. So I'm going to be watching for a break of this higher low pattern. The bulls have formed higher lows ever since this bounce began to start the week. If we get a break of 235.68 on Monday, we know some further consolidation is coming. And the question from here is, are the bulls going to form a higher low and then break the recent top to head back towards recent all-time highs? Or are we going to just form another lower high here and then head down to another lower low like we have seen in March, a lower high and a lower low? So I'm going to be watching the volume on this pullback very close. That's going to be a key indication as to whether or not we can expect a higher low to form, and obviously the price action and momentum as we head into the end of each day. So as of right now, we are looking for a bit of downside heading into Monday, and if we get a break of that low, we will look for some follow through. The weekly time frame, very strong week and a strong close, keeping and regaining some exponential moving averages as support. So bulls couldn't have asked for a better response to that weakness heading into this week, and we're going to be watching to lose these exponential moving average supports as a bearish indication, but if that does not happen, then obviously the bulls remain in full control. If we lose those levels, we will see a bearish MACD cross and a bearish TCG cross of these exponential moving averages. So watching very close how this next week goes. And again, with this lower high currently being set, it's going to be very important to see if the bulls can form a higher low and higher high, or if we're heading back to our recent lows. And the 50-day moving average will come first, and that will be a nice gauge of strength as to whether or not the bulls can hold that level again. IWM going into the end of the week here, very strong move to the upside, and it was very weak, weaker than SPY here on the downside move, but also stronger than SPY on the upside move. So the high here to break was 138.33. We got up to 138.17, so it is still a lower high, and this is a bearish reversal candlestick at the top of a very strong bounce. We saw a very significant bounce this week in IWM, and this candlestick tells us that more likely than not we're going to consolidate because the bulls are getting tired here with this upper wick and indecision. If we see a red day on Monday, we will look for a pullback. It's the same exact story on SPY, but because of the significance of this recovery, I personally would expect a higher low to form before the bulls head back up to test this 138 level. So we have some moving averages as support, and we have a bunch of support levels built on the way up, and we will be watching for a consolidation, establish a higher low, and then we'll see if the bulls are able to get that higher high by breaking 138.17 and 138.33. Weekly time frame regained the middle Bollinger Band, so we came to a key support level. We had 132.74, and we bounced off of 132.40 as a double bottom the past 2 days. So even though we broke that level by about 30 cents or so, we still closed above it, and you could put a support line right there on 132.80, and you can see we bounced off of it weeks in a row back in January, and we just bounced off of it 2 weeks in a row again here on the weekly time frame to start, or to end March, I should say. So it is a clear support level here on the weekly time frame, and if we were to lose that level, that would be a red flag for the bulls in the short term. But as of right now, again, very strong weekly recovery, and the bulls are still in control, but this candlestick indicates a bit of weakness heading into next week, and we'll just be looking to see if it's normal, healthy consolidation or not, and again, volume is going to help us determine that. QQQ, new all-time high, and I feel like in the past 3 months, I have said that statement dozens and dozens of times, and that's because I have, and that's because the tech sector is on fire. So higher lows and higher highs, the upper Bollinger Band still rejecting the price 4 days in a row. It rejected the price 5 days in a row back in March. So another 4 rejections in a row. Very clearly, that is the resistance level to be watching, and it's going to be up in the 133 range in the next coming couple of days. So the bulls are still strong, but we're going to be watching for a break of the higher low pattern to indicate some consolidation is coming. And on consolidation, we'll look to test the middle Bollinger Band, which will be in the mid 131s this coming week. So I'm looking at 132.08 and 132.13, the lows of the past 2 days. Break those levels, and we will expect to test this middle Bollinger Band this coming week. The weekly time frame, the bulls are still in full control, holding exponential moving average supports. By far the strongest weekly chart. We're nowhere near a bearish TCG cross or a bearish MACD cross, and the tech sector continues to outperform. So that's what we got heading into next week. A very bullish week, some weakness indicating to start this coming week. And the question is, can we form a higher low and then a higher high on a recovery, or are we heading back down towards our recent lows? Keep an eye on volume. Thanks for watching. Have a great rest of your weekend.